الله وبركاته. Good morning, everybody. Welcome to our food interactive session for the first 6 months. First of all, I'd like to welcome everybody and we'll start our presentation. بسم الله الرحمن الرحيم. الحمد لله رب العالمين والصلاة والسلام على سيد المرسلين سيدنا محمد وعلى آله وصحبه أجمعين. الصفاء Food established in 2001 as the first integrated poultry company, public listed company, and start commercial operation in 2004. Our poultry farm located in Ampit, Simrit area, location of 50 square kilometers, around 140 kilometers from Salalah city. The project is a full integrated project starting from production of hatching eggs to the hatchery, the broiler farm supported by the feed mill and the process plant, including all the other departments, security and quality control and logistics. We are now Al-Safa Food, the largest poultry company in the Sultanate of Oman. We are producing 42,000 metric tons per year. And this company starting with the vision to be one of the top most successful companies in the food sector in the Middle East. Our main objective provide ideal and healthy environment to produce poultry, providing high quality poultry products according to the international standard, gaining and own the customer confidence, and ensure the biosecurity in Oman. We have more than 50 type of products, starting from the chilled and frozen products up to the food processing and adding value products, and we own 4 brands. Development of Al-Safa, we started production in 2004 with 10,000 metric tons. Our hatchery was producing 11 million chicks, and we had that time 45 broiler farms, and our feed mill producing 28,000 metric tons per year. Then, because of the marketing demand and requirement, we increased our production to 15,000 metric tons per year in 2008. We increased our hatchery capacity to 15 million chicks per year, and we adding we built additional farms to reaching 81 farms, and our feed mill production reached that time 34,000 metric tons. And in 2012, we increased our production to 21,000 metric tons. We extend our hatchery capacity to 22 million chicks. Our broiler farm reached that time 90 houses, and our feed mill production was 52,000 metric tons. And because of the increasing the demand in the local market, Al-Safa management and company take a decision to increase their production 100%. And Alhamdulillah, we achieved that in 2021. Our total production per year become 42,000 metric tons. Our hatchery production is 44 to 45 million chicks per year. We increased number of houses in the farm to 180 houses, and we increased our feed mill production 105,000 metric tons. Al-Safa Food company consists of 2 subsidiary companies. Al-Safa Food Processing, which is producing 4,500 metric tons per year of adding value products, and Al-Safa Logistics, our logistics company, and their capacity 4,000 metric tons per year. Also, we have investment in food poultry. for the hatching egg production, and also we have investment in the Masqat. Now, if you allow me, I will give the mic to Mr. Rafiq Chaudhary, our CFO, to present the remaining of the presentation. Please.
Thank you, sir. The CEO has given the overall the company progress throughout. I mean, since it started its commercial operation from 2004, and which is showing that the company has continuously grown, continuously has shown the capacity increase, production increase, as well as its penetration in the market. For the 6 months, the performance. Before presenting the 6 month performance, I will just like to present the challenges which we are facing, starting from the last year and this year also. Unfortunately, the material prices has increased very high. We have not seen such increase during the last 10 years. There was a price increase in 2008 and 9, but this year the price increase has crossed all the previous levels. The feed material prices, some of the items have gone 100% price increase in our feed material pricing, which has impacted the performance, the financial performance of the project. And on the other side, we had some challenges for the electricity also, because the electricity cost, the electricity was not stable from the grid, and we were running some of the operations from the diesel run generator, which was almost double than the cost of the electricity. So we have around 400,000 additional cost to run the generator, minimum 400,000. 400,000 is the diesel cost only, but in addition to the 400,000, the maintenance cost also. So honestly, the total cost may be around $500,000 to run the diesel generator to produce electricity. But we are pleased to announce that Alhamdulillah, during the June, all the issues related to the grid has been resolved, and now we are fully on the grid electricity, and this cost has been reduced from the mid of the June, and now this cost has been controlled. But the feed cost, unfortunately, still the prices are going very high because of the international, because of the productivity, the production crop scenario, the other, the challenges with the drought and the other things, plus the international conflict also, which you must be very well aware. In addition to that, because we have the imported product, the cheap price, they are just dumping it. It is not based on the cost, it is dumping, which matter has been already the matter we are taking up with the authorities and getting some help, but this has also impacted the financial performance of the company. I'll just present the numbers now, because you must have seen already, but we will present the number also. You see, I'll go to the group performance. We are pleased to say that our sale has increased by 45% by 8.28 million, from 18.129 million. It has increased to 26.406 million. This is mainly because of our extension project. Because the extension project last year, the commercial operation started from the Q2 21, but this year, all 6 months, we have the full production, full expansion running, and the sale also. And so this is showing the difference of showing the benefit of the expansion. We have the expansion. We are achieving the food security also for the country and supplying to the other region also. And plus, the company is also benefiting from the expansion. So this is 45% increase. The gross profit, I mean, if you look at it, has increased from 5.5 to 5.6 million. But this is mainly because this year the prices started increasing last year, but this year the prices are touching very high. As I mentioned, that some of the items have increased by 100%. We have made significant control on the expenses. If you see, the selling expense has been reduced, and which has helped us to achieve the profit before the finance cost, to increase it from 1 million to 1.7 million. This is also a significant improvement by controlling the expenses. Finance cost has increased because this year the full cost has come, all the loan which we took for the expenses. That has increased from almost 1 million to 1.5 million, and the net profit is 162,000. 162,958 as compared to 33,000 for the group. Then we have we incorporated the performance from our associate companies, which is one of the associate companies that started operation last year. Because of the first year, they have suffered the losses, which we incorporated, which has reduced our loss, the profit 162,000 to 100,000 loss. So for the group. So this is the performance for the 6 months. On the balance sheet side, can you go to the next? Yes. On the balance sheet side, you will see, because we have capitalized all the costs, the capitalization was made earlier by June, so this is almost the same, only the less is depreciation. If you look at the debt equity ratio, it is 50-50, which is quite healthy for a project which has started. Which has started 100% expansion last year. Increasing the facilities from 20,000 metric ton to 42,000 metric ton. So and we have borrowed the money also. This is quite a healthy debt equity ratio. And similarly, our current ratio is also above 1, as against the 31 million current assets. We have the current liability 27 million, which is also showing the healthy position of current ratio, debt equity ratio, showing the good performance. We are expecting, inshallah, the benefit from the expansion in our future approach.
Thank you, Mr. Rafi. Now, this is our presentation. If there is any questions, please. Yes, you can ask, but I think you are mute.
Can you on your mic? Your mic.
Any questions? Our guest?
Hello.
Yes, please.
Thank you so
Yeah,
much.
we can hear you now.
Yes. Good morning. This is Bishan Bhalla from Vision Capital. Thank you for the presentation. Appreciate it. Just a couple of questions. Uh, you mentioned in your report that a couple of factors that have led to higher revenues is, of course, the mobilization of the expansion. At the same time, we have some concerns which have been lingering throughout the year, which is higher raw material prices. And you mentioned that, Mr. Rafiq, that these are record prices which you haven't witnessed in the last decade, along with the twin impact of cheaper imports and grid instability. Now, you mentioned clearly that during the second quarter, the electricity supply issue has been resorted. So that's good to hear. But could you just give your comments on sort of the raw material prices as well as the import threat? If you could just touch upon these 2 points, how do you see these panning out during the second half and going forward?
Thank you for your question. As far as the material prices are concerned, so this is unfortunately because we are very much active looking at the prices. I mean, if anybody can go onto the TBO2 Chicago Board of Trading, they can see the trend. I mean, for the last 2 weeks, there was some reduction. There was the prices going down, and we were seeing that there might be already. I mean, it had touched the high, and now it will go down. But again, for the 2 days, the prices are going very high. This situation is honestly not predictable. It looks that until the new crops are coming, the prices will be this level. Prices will be going high, but unfortunately, the new crop so far, the news are coming that the crops are affected, and particularly if you see the one part where the war is going on, so there also the situation is not very good. That is the reason the prices look not in so far the indications are not coming that the prices will be going down. Certainly it will go down, but it will go down, I think, by next year with the new crop, because this level will not continue. There will be reduction. But on the other side, which I mean from electricity side, yes, that's a good news, because that cost which has impacted, if it would not have been there, we would have 500,000 the better result, which will certainly help us in the following quarter. That will help us. And regarding your second question about the import and others, there is a difference now, because this the price increase, it is impacting the producer on the other part also, which on the exporting countries also. So that prices are also going up now, not the same level. Yes, sometimes if they have the extra stock, which they could not sell in their market, so they will try to dump wherever it is available at the prices. So this scenario we have to face. We have to face with our quality, with our, the enjoying the loyalty from the customer, which honestly we are enjoying. That is the reason that in spite of all these things, we have the performance much better as compared to the other poultry sector in the region, which you can verify.
Okay, noted. One of the things I wanted to understand is we've seen that in the second quarter, like you mentioned, because of the completion and the full mobilization, we've seen your revenue on a YOY basis go up by 40%, on a quarterly basis by 13%. But what is impressive is the margin expansion that I've noticed over there. So if your gross profit margin was 18% in the first quarter, it's expanded to 25% in the second quarter. And that's impressive to sort of note. Could you just touch upon that as to what led to this margin expansion? Moreover, above just the revenue numbers going up?
Thank you very much. I'm happy that you have done the quarterly analysis also. But here we were presenting, so I was not going into that one. But honestly, thank you for going into that one. So this is basically, you are very well aware that last year everyone has suffered because of this COVID lockdown and this thing. So all have suffered that one. So there is I mean that has troubled in the Q1 also to us, because we were having a lot of trouble facing to reach the market, to go to the export market last year, because they were all locked down. Only I think in probably November we started going to our export market. We are exporting also, and from 20,000 metric ton to 40,000 metric ton, certainly immediately consuming in the local market was also not easy, because here also all the Horeca business that was also suffering, restaurant and this thing. So we were having some challenges that one. So some stock was then from the previous month, which we have to liquidate in the Q1. That is the reason the Q1 we compromised on the sales and this thing, but the Q2 we controlled all those parts. So that's the reason where we were able to get better margin in the Q2.
Okay, noted. And obviously, I mean, another factor that sort of your numbers tell me is that at least the raw material prices, prima facie, I mean, I might be a bit off track here, but prima facie, your raw material prices on an absolute level were, or rather on a margin level, were much higher in the first quarter compared to second quarter. Would that be a correct assumption?
Not really. Unfortunately, the material prices are more in the Q1. The material prices was less. I mean, as compared, not less. I mean, if I'll just give example, if it was 160 or 165, it was 180 in the Q2. So I'm just giving the example only. The Q2, because the prices have gone very high. If you find any time, you just see on CME or the CBOT, that corn and soybean meal graph. So this will show that the prices went very high. So the raw material prices, otherwise, if the raw material prices would not have high in the Q2, our margin would have been better than what we have shown. So the raw material prices in Q2 is higher than the Q1. This is the reality.
Fair enough. Next question is with regards to your associates. The performance has been lagging for the first half. How do you see that panning out in the second half, or let's say next year, because this year would be an extraordinary circumstance?
Associate company, because I think this year also because this is their first full year operation, and probably they have also, they started the operation partially. So that is some challenges they are facing. So they will have their performance will be impacting the second half also.
Noted. All right. Thank you so much, gentlemen. Wish you all the best. Yeah. Thank you so much.
Thank you.
Any more questions? If there is no more question, I would like to thank everybody, all the guests to attend our interactive session. And thank you very much for the team, Mr. Rafiq, Mr. Yasser, and Mr. Bilal here. And for the team, our IT team. Thank you very much, gentlemen.